Good day everyone, hope you're well. Today's video is going to go about liquidity sweeps and how I look at the market to identify a liquidity sweep. It's going to be a nice short video. I'm going to show you some examples, and yes, if you like my videos, please like and subscribe. It helps the channel a lot. And yeah, please leave a comment if you want me to cover a certain pair, a certain time frame, and so on. Let me know. Awesome. And then let's get straight into our video. Alright, so first I'm going to explain to you what type of liquidity sweeps I'm looking for. This is a quick example. The majority of the time I'm looking for highs and lows to be taken out. If we are in a down move, I'm looking for a high to be taken out. If we are in an up move, I'm looking for a low to be taken out. So as we can see, market here is in an uptrend. We're breaking structure the whole time. And then this down move here, we had a market structure shift. So that indicates to me, all right, let's see what market is doing. So I'm going to look at this level to be taken out now. So market took that out. We had our market structure shift here. Market structure shift. Now let's see what happens. Now price comes down, create a lower high, but we still got this big impulse move, so I won't enter from this high here. I would wait for liquidity to be taken here if there's an order block or fair value gap that's resting here. So I love it if the market does something like this and does not break this low, because now it tells me, all right, liquidity has been created. Market needs to come up to take the liquidity into our point of interest before the big down move. And what's resting down here? Stop losses for people that's going to buy. So this is liquidity that needs to be taken. So a safe target for you would be this level to take your profits. Alright, so let's follow along. So we got here, we broke market structure, liquidity was taken. Now, if the market leaves a fair value gap or order block, you can enter from here as well, putting your stops below this high, below that high there. The reason why I would enter from this one here, because liquidity has been taken here, it entered a point of interest, down move, and then this will be a continuation. So where would our target be? The next level of liquidity, the low that was created. Then again, we got a big impulse move, we got our high, low, exactly the same. There's liquidity. Now look what happens here. So market has been broken. Now we're starting to see an uptrend. So this is not sufficient. This does not tell me anything. So I'm waiting for market to see what market does. For me, I would want to see this low being broken so that we can continue the down move. But now we see we have an uptrend, an up impulse move, retrace, never took out this low. It broke this high again. So where's liquidity resting? Liquidity is resting above all these highs here. That's where liquidity is resting. Let's just delete this. So liquidity is resting above all these highs. All right. So now liquidity, because those highs has not been taken yet. So up move, down, up. So we broke it there. Now I'm still not 100% convinced because we need this high to be broken. You'll see sometimes the market will do something like this. So that high is created there. So now what we are waiting for is for these lows to be taken. Let's see, highs, lows, highs. So let's say price never broke this high. Technically we are still in a down move, but now where you can enter, for example, if price doesn't break this high, remember you don't know if price is going to break the high or not. So your trade, because we're on a down move, your chances is higher for the price to go down. But if it's a reversal, then your trade will be taken out. If you put, for example, a trade in here and you put your stop there, we will target there, but you'll see in this example price came down and it took it out. So this would be a losing trade. But what I like about this is because there's liquidity being created, you can enter from a fair value gap or order block here and put your stops there. Your trade might have gone in profit, break even. If not, you got taken out. But what happens now? We created this low that took out this high, that high, and we're targeting this high now because these two highs has been taken out. So now what I would do, let's see what happens. We've got a big impulse move. Liquidity, do you agree with me? Liquidity has been taken there. Big impulse move. Where would we enter from? A fair value gap or an order block. And then we will target this level of liquidity, and then price would go up there. And that's how I identify liquidity, for looking for highs and for lows and just following the market structure. Alright, so let's go into a few chart examples. Alright, so as you can see, for example here we have a high, low, high. We broke this low. So what happened here, this was liquidity being taken. As you can see, it literally just wicked it. So liquidity has been taken. So where are we going to target? This high here. So let's just mark it out. So this would be my TP. So let's have a look. If liquidity has been taken, we got our market structure shift. We left an order block or fair value gap. We entered our price. Stop loss below the low. And we target our TP. 1 till 7 risk to reward trade. Nice and easy. Okay, let's follow what's happening. So we have our low, high. Okay, so high was taken out there. Let's just delete this. High was taken out there. Now where's the most recent valid low? So it's going to be this one here. As you can see, price made a new high. This is going to be my low. Price came down, took our liquidity just here. We had a market structure shift. On the lower time frame, you'll see that is a fractal high. Where was the fair value gap? Created there. And it's inside an order block. So we're waiting for price to come back, retrace. Our target would be here. As you can see, price came down, took us out. We have a losing trade. So let's just zoom out to see what's happening on the bigger picture. So if you look at the bigger picture, you will see when liquidity was here, we had our low. On the higher time frame, this would be one. You can see it as a nice one leg. So low, high, low, high. Okay, we got stopped out there. Let's see what happens here. So this is my last higher high. We created a low, high, low that was taken out here. We had a market structure shift happening here. So we have an order block and a few fair value gaps on a higher time frame. You can probably draw it from there. Let's just extend this. Don't know if price came back yet. This is the current market, so this is a point of interest that I will be looking for. It's that one there. Okay, so let's see what's happening during the price. Alright, so we have a huge up move. High, low, high, low, high. So this is my highest high. So as you can see, price took out this high, liquidity sweep. We want this low to be taken out. This low got taken out here with this move here. So let's just mark it out. Lower time frame, that's going to be a nice order block. Got took out. Entered our point of interest. While we were entering our point of interest, we had a nice liquidity sweep. We broke this low. And what did price leave us? Price left us an order block there. And a fair value gap there. So this is nice. Two places where you can place your sell limit. And what did we create? We created liquidity. So we would enter our first trade there. Got tapped in. We will target the lows. Stop loss above the high. Our second trade would have been entered there. We never got tapped in. Never got tapped into that one. So we got tapped into price. Price came down. We were in profit. Let's follow the market structure. As we can see, there's some liquidity resting down here. Relative equal lows. This will be our new high. Our new high there. All right. So we inside of a range. Got tapped in. Could put your stop to break even, or if you left your trade, you would have been stopped out there. But it's a beautiful trade. If you are sitting on 2.3 risk to reward, hopefully you either put your trades on break even or you took some partial profits as well. Okay, let's follow what price is doing. So price tapped our low, liquidity was taken there. So internal market structure, this is our high, this is our low. So high, low, high, low. What's resting down here? Of course, double tops, double bottoms, liquidity. So relative equal lows. Is there a point of interest? When you look at the left side, there's a nice order block there. Liquidity was created, tapped into the order block. Price moved up. We broke this high. So let's quickly see, we have a big order block on the higher time frames with a fair value gap inside. So I would mark that out as a point of interest. Price eventually came down, tapped it in. What happened at the top here? So we went up, 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 we broke this high, we created a new high that was taken out here with a wick. We are waiting for market structure shift. That's happening there. What did price leave us? A nice big order block with a fair value gap that was already tagged in previously. So that's good confirmation. I would enter from the order block. Look on the bigger picture. Remember, we are targeting here. The bigger picture, this is going to be my low. Plus, if you extend this previous one, look at the price. You could have taken your trade there, stop loss be above that high, and you target the low down there. Again, liquidity was created before our point of interest was triggered. Alright, let's see what's happening here. So we entered our point of interest, price made liquidity, liquidity, liquidity. Price tapped in. This was my last low that was taken out. We had market structure shift there. We left an order block. Where would I target for my TP? Back to that region. Enter the trade. Stop loss below this low. And TP hit. Okay, so let's see. This is my new high. Low. High. Low. High. Low. Alright, so let's have a look what's happening here. So this is current price now. So high, low, high, sorry, this is the lowest low, high, low, high. So we took out here. We're waiting for this low to be taken out. Why this low? This was the last fractal low that broke that high. If you go onto the 5 minute, you will see what I mean. You see there, fractal low, liquidity was taken. Alright, so we had a big push, market structure shift. There's our order block. Let's quickly go back to the 15 minute. The big impulse move down. On the time frame that we are doing the analysis on, you can see there's that order block with a fair value gap. There we go. As you can see, price tagged as in if you entered from the fair value gap. Stop loss above that high. And where would my first target be? This low that was created. Yeah. And that's a nice quick trade, nice and quick. It's a 1 to 6 risk to reward. We're following high, low, high. This low was taken out. On the bigger picture, where's that low? There's that what? That low there, it was taken out. So liquidity, 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 liquidity. So on the higher time frames, this would be your low. So what's happening now? We swept it. We have our market structure shift there. We left our order block. We tagged our order block. So what would I look for now? I would look for buys in this area to target this high. when this high is broken, I would look for something in this area to take a sell down again to target our higher point of interest. This one that we draw out here. This one here. Let's quickly go to the 30 minutes to see if we can refine our entry a little bit. There we go. So you can use this as a nice order block area. Let's go to the 1 hour. There we go. 3 up candles. It's an order block on the higher time frame. So that would be my point of interest. I would buy up there to go up there. Liquidity already has been created. And I would target this low then. And for the bigger picture, I would target this low. Yeah. Alright, so that's how I look at liquidity, what I'm looking for. So liquidity plays a big role in my strategy. If you follow this and practice it, first of all, don't just go onto the live market, practice it, back test it, forward test it, demo account, trade it, practice it before you go to the live funds. Alright, if you like this video, please like and subscribe, and then I'll see you in the next video.